So Ray Dalio, one of the most famous investors in the world, has just invested into 5 stocks. In this video, I'll be revealing what these 5 stocks are and sharing his entire portfolio with you so that you and me can learn from one of the great investors. Firstly though, this is not financial advice, and I'm going to go ahead and say early on, I'm not smart enough to pick the individual winners in the stock market. That's why for these types of videos, I just turn it over to people who are much smarter than myself. People like Ray Dalio who can pick the best individual companies. And then my goal is just to present this to you. Nothing more. Okay, so let's get straight into it. Ray Dalio is the founder and co-chief investment officer of Bridgewater Associates. And while it would be great if they could simply share their portfolio live and updated online for us to all see, unfortunately that's not how things work. But because they do have to file with the SEC, every 3 months we get a sneak peek into what their portfolio is. And if we compare that with what their portfolio was at the time of the previous filing 3 months before, we can also see which companies they've been buying and selling over the past few months. So that's what's happened. In the past few days, Dalio and Bridgewater Associates have put in their most recent filing. It's really interesting too because they have shifted their portfolio a lot in this time. And we can see which 5 companies they've increased their holdings in the most. So that's what we'll be talking about in today's video. By the way, if you enjoy these types of breakdowns of what the world's best investors are doing, it would be a great help if you could hit the like button so more people can see this video. And if you're interested in this type of thing, subscribe, as we'll be doing more of these about the likes of Warren Buffett too in the coming weeks. So let's talk about this first stock. In 5th position, we have Dollar General. So if we take a look at Dalio and Bridgewater's filing, we can see that they used to hold 7,089 shares for a total investment size of $1.35 million. However, in the past few months, they have bought just over 115,000 new shares. So today they hold 122,107 shares with a total value of $25.6 million. And that is an increase in the number of shares by 1,622%. As they put it themselves, Dollar General makes shopping for everyday needs simpler and hassle-free by offering an assortment of the most popular brands at low everyday prices in convenient locations and online. Dollar General has a simple and effective business model. It draws customers to its store with attractive prices on a variety of goods. These include everyday items like soap and toothpaste, home products such as kitchen supplies, apparel, and seasonal items. Over the last 5 years, it has grown its diluted earnings per share at a compounded annual rate of 11%. And analysts have noted how stores like Dollar General, which offer products at cheaper prices compared to other stores, they could perform very well in times like this, when there is more economic uncertainty around today and people are trying to save as much money as possible. This chart you can see now shows us Dollar General's revenue since the beginning of 2015. As we can see, their revenue has grown with remarkable consistency for the past 5 years and has seen a sharp uptick over the course of 2020. Now this chart shows us their earnings in the same window. While not as consistent as their revenue growth, the general trend is upwards and we can see that same uptick in 2022. And finally, we have their free cash flow chart, which shows a similar pattern with a general upward trend even before 2020. Now, if you're interested in learning more about Dollar General, I'd recommend that you sit down after this video and do a lot more research. Like I said at the beginning, with this video, I'm just trying to show you the companies that Ray Dalio and his team at Bridgewater have been buying and give you a good basis for beginning your research. In number 4, we have Target. If we go back to the filing, we can see that Bridgewater previously held 13,831 shares for a total investment size of $1.66 million. Over the past few months, they've purchased nearly 230,000 new shares, bringing their total up to 242,771 shares with a total value of $38.2 million. And that is an increase in the number of shares by 1,655%. The Target Corporation is an American mass market retail company operating large-scale food and general merchandise discount stores. With Target operating in the mass market retail sector, there is a similar argument in favour of them as there is for Dollar General. In times of economic uncertainty, it is often stores which can offer steep discounts that perform well. This chart shows us Target's revenue since the beginning of 2015. As we can see, there has been slight positive growth. However, with an annual growth rate of just 1.1%, the growth certainly has been modest. Earnings have also seen net growth over time, but the rate of growth has also been very modest. In fact, after a peak in 2016, earnings fell for the next few years and have only just grown above those previous levels recently. When we look at free cash flow, we see a similar pattern, where the overall trend is not particularly clear, but the most recent levels are above those seen before. Analysts have noted that some investors have been buying Target's shares in order to receive its upcoming dividend. However, investors that purchase the stock on or after the 17th of November will not receive the next dividend, which will be paid out on the 10th of December. So that is something to keep in mind. In number 3, we have CVS Health. Going back to the filing, Bridgewater previously held 13,765 shares for a total investment size of $894,000. In the last few months, they've purchased over 300,000 new shares, bringing their total up to 333,804 shares with a total value of $19.5 million. And that is an increase in the number of shares by 2,325%. CVS Health is a healthcare innovation company that operates through 4 segments: pharmacy services, retail/LTC, healthcare benefits, and corporate. Most notably, CVS Health is the parent company behind the CVS pharmacy chain. By integrating thousands of retail locations with pharmacy and medical benefits management services, CVS Health is positioned to earn profits for its shareholders regardless of what the economy throws at it. Most investors are familiar with CVS Health's retail operation, but the front of store purchases are responsible for just 7% of the company's revenue right now. From 2008 through 2017, CVS Health raised its dividend payout an astounding 733%, but the dividend has been frozen in place since early 2017. During the third quarter, CVS Health paid down $4.75 billion in debt, putting the company on pace to reach its deleveraging target and resume raising its quarterly payout in 2020. Here we can see the company's annual revenue. With a growth of 3.3% per year on average, growth has been relatively strong. However, 2020 of course has been a very tough year. Their earnings data is generally on an uptrend if we compare recent earnings with 2014, but there has been some major ups and downs along the way, and the free cash flow data looks much the same. The general trend is upwards when we average out the years, but the path has been very volatile. And there are risks associated with CVS. Like all pharmacies, CVS faces political pressure to lower drug prices. They also face pressure from the e-commerce titan Amazon. In number 2 position, we have Starbucks. So Starbucks sell coffee, and I don't think we need to go any further with the explanation than that. For the company, the number of 90-day active members in the Coffee Giant's loyalty program slipped to 16.3 million during the early days of the health crisis as many locations closed and consumers stayed home. By the end of the fiscal fourth quarter in late September, that number rebounded to 19.3 million. That's up 10% year over year and is nearly back to the pre-crisis levels of 19.4 million. Sales have suffered this year due to the crisis, but a recovery is underway. US same-store sales and China same-store sales were down 40% and 19% respectively in the fiscal third quarter. In the following quarter, the decline shrunk to 9% and 3% respectively. The US and China are the company's biggest markets, so the progress in both of these is significant. Now, if we take a look at Starbucks' revenue growth, we can see that it has been on a remarkably consistent upward trend. However, of course, 2020 has been a huge blow to the company, and as already noted, Revenue has yet to return to pre-crisis levels. The earnings data creates for an interesting interpretation, with Starbucks unsurprisingly finishing with a major crash as a result of the events of 2020. And finally, we have the free cash flow data, which shows pretty flat numbers between 2015 and mid-2018 before a huge rise and subsequently an even larger drop as was to be expected. Finally, in number one position, we have Costco. As we can see from their filing, previously Dalio and Bridgewater held only 2,155 shares for a total investment size of $653,000. However, in the past few months, they've bought over 200,000 new shares, which means today they hold just under 219,000 shares with a total value of $77,265,000. Over half a decade, Costco Wholesale managed to grow its earnings per share at 11% per year. This earnings per share growth is lower than the 19% average annual increase in the share price, which suggests that market participants hold the company in higher regard. When including for dividends and assuming they are reinvested, Costco has a total return of 164% for the past 5 years. And this chart shows us Costco's revenue history. As we can see, over the past 6 years, Costco has been able to continually grow their revenue year on year in a remarkably steady way. This chart shows us Costco's earnings history, which also demonstrates remarkably steady growth, albeit with some dips along the way, such as in early 2020. And this final chart, which is the free cash flow data, is not as consistent or stable a chart, but the general trend has clearly been upwards, especially since early to mid 2019. When we compare Costco with the likes of Walmart, there is also a difference. Over the past decade, Costco's revenue, operating income, and profit all grew at a higher compound annual rate than Walmart. In fact, Walmart's operating income is down compared to 10 years ago, while its net income is essentially flat. Costco, on the other hand, has expanded the top and bottom lines at 7.9% and 11.9% per year, respectively, since 2010. So those 5 companies represent the largest percentage increases to Bridgewater's portfolio since the last update that we've done. And if you're an active investor, you should hopefully now have some really interesting data to begin your research. However, for me, what's much more interesting than looking at specific companies is to look at the largest holdings in Bridgewater's portfolio. I'm talking about their investments into the S&P 500, into gold, and into emerging markets, and find out what's been happening with those investments. So let's jump back over to the portfolio and take a look. If we arrange things in terms of the previous value of investments, we can see a new order appear. Basically, what we're seeing now is the list of the largest to the smallest investments that Bridgewater held in their last update 3 months ago. In a minute, we're going to rearrange this again to see which investments are the largest today. But first, let's pick out some interesting patterns which have emerged since we last talked about this. So as we can see, in their last update, their largest investment at the time was the Spider S&P 500 ETF. Essentially, this is an investment which holds 500 of America's largest companies. So we can think of this as taking a diversified bet on America's stock market. In the last few months, Bridgewater have sold 21.3% of these shares. And to be clear, this is the number of shares. So when I say they sold 21.3%, it means they cashed out this much of their position, regardless of prices rising or falling in the meantime. If we continue, we can see that their investment into the Spider Gold Shares ETF, i.e. an investment into gold, remained the same. They neither bought or sold any shares. In third, we have the iShares Core S&P 500 ETF. This is essentially the same as before, a bet on America's 500 largest companies. With this, they sold a dramatic 63% of their shares in just the past few months. In fourth, there is the Vanguard Emerging Markets Stock Index Fund, and this is basically comprised of large and mid-sized companies in emerging markets. Here, Bridgewater increased the size of their investment in the fund by 12.8% over the past few months. Next is the iShares Gold Trust. Again, this is akin to buying gold. And again, Bridgewater have kept their position steady with no new purchases or sales. After this, we have Alibaba. the online platform connecting manufacturers and wholesalers in China to businesses in other countries. With an increase in shares of 40.3%, this marks a large jump and doubles down on Dalio and Bridgewater's bullish thoughts on the company. And the final two investments to talk about are into the iShares China Large Cap ETF. So this is basically an investment into China's 50 largest companies, and the iShares MSCI China ETF. So this is basically the same, but more diversified than just the top 50, so you're holding more Chinese companies. Interestingly, Dalio and Bridgewater have reduced their position in each of these funds by 22.8% and 26.1% respectively. Finally, I'm just going to quickly rearrange the portfolio to show you the most up-to-date information we have for their largest investments to the smallest. And then I'll share my thoughts on what I think we can all take away from this. So in number one position, we have an American S&P 500 ETF. In number two, we still have their investment into gold. In number three, we now have their investment into emerging markets. In number four, we can see their investment is into Alibaba, their single largest company holding. And number five, another investment into gold. So when I look at the changes that Dalio and Bridgewater have been making, to summarize, I would say that they appear less confident on betting on America's stock market as a whole than they have been in the past, and are choosing instead to invest into more specific US companies which they've analysed. At the same time though, their single largest investment by some distance is still the SPDR S&P 500 ETF. So it would be wrong to conclude they aren't bullish on America's stock market as a whole. Of course, as this is literally their largest holding, it tells us they still see a huge amount of opportunity here. When it comes to gold, they are simply remaining steady, choosing not to make any changes at all to their two largest positions. Over the past few years, we've seen Bridgewater gradually increasing their position in the Chinese stock market. So it's somewhat of a surprise to see they've actually trimmed their major positions in China in this update. However, they clearly are bullish on Alibaba and emerging market funds, which feature many Chinese companies within. I also want to add a couple of very important points. As I said at the beginning of this video, this is not a live updated portfolio. That's something we're never going to get access to. The best that we get is a glimpse into Bridgewater's portfolio when they put these filings in every 3 months. And that means something important. Things may have changed since the last filing. Again, this is just an opportunity to learn about new companies and investments, but you have to apply your own research, because truly I wish I could share their live updated portfolio, but it just doesn't work like this. Still, I think there are some really interesting things we can take away from this video and apply to our own investments. So I hope you've enjoyed this video, and if you have and you want to see my update about Warren Buffett's portfolio, which will be coming out very soon, make sure to subscribe. In fact, depending on when you're watching this, it might already be up here of one of these two directions right now. Thank you for watching.